All right, welcome everyone to today's webinar. Got a great topic for you. Today I'm going to be giving you three things. That's it. Just three small things that you should be able to implement into your trading business tonight and start to see results as early as tomorrow. Now, are these the only three things that you need to do to become successful? Will these three things bring you glorified riches beyond your wildest dreams? No, not at all. But they should help you become more successful, because when I look back in my trading career, which has now spanned over 20 years, and I try to think back to the time when I was a struggling noob trying to make the transition from a somewhat consistent trader to somebody that could actually do this for a living and depend on it for an income, I realized the mistake that a lot of us made is we lose sight of the basics. We try to overcomplicate the trading process and things that go with it, and sometimes that does more harm than it does good. So we're going to try to touch on that today and try to help everyone out. Now, before I get started, do me a favor, guys. You should be able to hear my audio, and you should also be able to see my grizzled mug right here on the screen. That may be horrifying to some of you, but you should be able to hear the audio. You should be able to see some video right now. If you don't, just do me a favor and type that into the text box or the comment box there, and we'll do what we can to get you online. Now, as I get started with this, I want to try to set the tone here. And this is something that you old timers, I see some of you in the trade room are in here. Anybody who's been following my whiteboards on YouTube and stuff like that, is that there are three components that go into a trade. And it's simple as that. I mean, what makes you successful is idea, execution, management. So when you think of the whole trading element, the whole trading game, that's all it comes down to. You must first have an idea. Once you have that idea, you must execute that idea, whether it is a buy or sell or whatever it might be. And then once you've executed that idea, you have to manage it within the market. You know, some ideas will work and some ideas will not. Now, when a trader enters the business or they're struggling with it, I want to draw this, I'm going to do my best to draw this trader's pie chart, I'll call it. It's the balance in which they think this works, okay? So for most traders, they think that the idea right here makes up for most of their success, when in fact, that's not even true at all. Now, I understand how you think about that and why it's like that, because right now you're inundated on social media by people selling you systems saying, I've unlocked a secret. I know something that you don't. My system works for everybody. Here are all my millionaire students. We're all going to be rich. And if you just buy it, you just trade with me, I will show you the way to riches. I understand that. And that sounds and seems like the easy way to do it. But I can tell you right now, and this goes for what I do, there is no single strategy or system that is going to make you successful overnight, okay? You're not going to just read a book or buy a DVD and learn a system, and that system's going to answer all of your problems. Now, it can help you understand what you're looking for and so on, which we'll talk about it, but there's not going to be a single system out there like that. Now, I know this is how most people think, because if you remember just a few months ago, I was at the Trade Ideas Summit, and I was up there on stage yodeling for like 20 minutes about trader psychology and how emotional this job can be. And then as soon as I got done, a swarm of people come around, and all they want to know about is, what are you trading? What kind of stocks are you trading? What indicators do you use? And it's like, did you not listen to a word I said, man? Was I just up there? Probably weren't. But what I want to show you is this is how it should look for a trader. Excuse me, not erasing. Is that management should make up most of what you do, execution, and then the idea. So in fact, your idea plays the least amount of a role in you being successful. Now, some of you may disagree, but by the time that we get done with this, I think you'll understand a little bit more. So let's go into it. Let me talk about what we've got here today. The first thing that I want to address today, the first thing that we want to do if we're struggling and we're trying to make that transition, or if we're just partially successful, but not successful enough, or we're in a funk. And the first thing is to simplify. And there are two parts to this. The first, we want to simplify that process, which is that very idea. Now, one of the misconceptions of stock trading is that you feel that you need to know every single thing about stock trading or you can't make money. I know I once felt that way too. So do you need to understand foreign currency to make money trading stocks? No. Do you need to understand Bitcoin? Do you need to understand options? Do you need to know what the GDP is of France? Do you need to know these things to make money trading stocks? No, you don't. Now, can they help you? Of course they can help you. But you don't have to know them to be very successful. It's not a requirement. Now, where I'm going with this is you will figure out if you've met professional traders or you in those circles. Most professional traders don't do very many things throughout the day. They only focus on 1 to 2 types of strategies. That's it. Trying to keep it as simple as they possibly can with that idea part. So when you're trying to think about an idea, you can't be cluttered with a bunch of nonsense. Like I said, if you're trying to trade a breakout on Netflix, the GDP of Lithuania is not important to you making that breakout, That's not going to help you. The unemployment rate or the Fed meeting, as long as it's not right there that minute being announced, that's not going to have an impact on that trade. So I think you understand what I'm saying. Most professional traders will only trade 1 to 2 things because you want to keep that process of that idea as simple as you possibly can, because things in trading happen very fast. So the longer that you clutter up your decision-making process, the harder it is for you to make some money. Now, this goes the same way with using indicators for your trading. Now, some of you might have some very cluttered up charts where you see lots of lines. But we go back to the same thing that we said. In order for you to be successful, do you need to have a MACD on your chart? Do you need a VWAP, a moving average? Do you need to know Elliott wave? Do you need to know Fibonacci cycles? No, you don't. Because if you're not successful right now, none of that stuff's going to make you successful today, because you're missing the very element of trading. You're missing the basics of trading. Now, as you have built your trading strategy and you've worked on your system, can those things help you? Absolutely. They can give you a little edge in helping you making that idea, helping you execute, and helping you manage your trade. They can give you a slight edge. But do you need them to make money? No, you don't. So I think you get where I'm going. We're going to talk about here the basics. So what is the basics of understanding a good idea and executing that idea and managing that idea? What is that formula? So I'm going to pull up some charts here and we're going to talk about it. And what it is, it's simple, just basic support and resistance. So let's look at a couple of charts here, some current charts, and then we'll go from there. All right, I'm now switched to some charts. You should be able to see some charts up on the screen. Again, if you don't, type something in the comment box. We'll try to help you. So I'm going to go over just basic support and resistance, because this is what's going to help you with that formula of idea execution and management. Like really the execution and management part of where you should be, where other traders are, and where you should sell. Just how simple support resistance works. Now, if you take a look, we've got a 5-minute chart up top that's intraday 5-minute. And down below, we have this is a daily chart. Those are the two that I use. Are these the only way you should be trading? No, I think I've already made that clear. This is just what works for me and my trading. Whatever works for your strategy, please stay with it. But we're just going to talk about support and resistance because that's what this is about. So ignore all the lines I've got written everywhere. Okay. So let's just kind of go back here. The first thing this thing does is it breaks out early in the morning. You get a really tall, strong volume breakout where this thing just goes straight up. Now at this point, you've got people piling in this thing without thinking about it. They just see green, they get mesmerized, they buy, but they've yet to kind of look at levels. Because what you've got here on this, if you look at the daily chart, once it breaks out, you have a first level of resistance, which is around 70, this area right here, which is about $71. I'm going to put it right here. It's maybe hard for you to see if you have your own charts, you look for it. This was the resistance point from about 5-6 trading sessions ago. So you're kind of buying this thing up there. So you're taking a pretty good chance. Now that doesn't mean it won't work, but what you're doing is you're developing a bad habit, because sometimes you just get lucky on a trade and you mistake that for skill, and that's not what we're in this business for. So anyway, this thing comes up here, and the first thing that it needs to do is confirm as to whether or not, before you buy, sell, or do anything with a stock like this, you have to confirm as to whether or not this move is going to stick or it's not. because it's so close to resistance, it's really difficult for you to buy this thing that early in the morning with all that emotion on top of it. It's difficult for you to buy that and manage risk. Again, it may work out for you, but that's not where you're going to be making your biggest money. So what it does here is this one actually does hold. So these sideways candles here where it's going sideways, yes, they're moving back and forth a little bit, but it's consolidation. It's confirming that this move is strong and it's trying to break through this upper band of resistance. Now, if you go back and you look at this, is a bigger piece of resistance that spanned 4 days, just about 10 days ago, somewhere in that, around this 72 area. So knowing this, as a trader, your execution, if you're not in it, is at $72. You're figuring if this thing has held, if it gets to 72, that's where the breakout is. That's where I need to be. And then you can judge your stop based on this. You can make a stop at 71.14 underneath this candle and so on. But you have that idea in your head. Now, once it makes that break, you see it starts to accelerate. And then it really starts to pile on. Now, the thing that you understand about this is once it goes vertical, it's understandable that it goes vertical because it broke out of a daily chart resistance point that was overhanging for a few weeks. So yeah, it's understandable that it breaks out. However, it starts to get really vertical. And this is where the other people come into the trade. So you think about someone at 73, someone at 74 who's buying this. This also tells you with support and resistance, who is in that trade. So my question to you is, do you think the person that's buying at $74 is a professional trader? Are they? No. $73.50? No. Now, certainly they could have made a little bit of money on it, but that's not how a pro trades a stock. These are all emotional amateur buying. To make a long story short, hence the reason why this thing rolls back over, that's understandable. But that's who's in that trade, okay? Because the real breakout was right here at the 71.50s to 72. That's where you needed to be to get max size on this trade and enjoy it. Now you can kind of jumping ahead here a little bit. You can see that once it's sold off, it sells right back in to the breakout point, and that's kind of where it settles in. So no surprise on these prices. It's amazing that traders often trade stocks and they've never thought about exit strategies, price levels, and so on. I mean, that's how you really make money, is just by these basic techniques. This is something that a MACD, well, maybe a Fibonacci, but MACDs and all that other kind of moving averages, they're not going to tell you, because stocks traditionally trade from one area, from one support level to the next resistance level. They usually get sold at resistance and bought at support. So what you have here is one that breaks through resistance and gets bought, and then trades back down into that previous resistance that's now future support. Hope I'm not confusing you. And that's where it has stayed. So going forward, this now becomes a significant spot for us, is $72 and $74. So hopefully you see how those levels work out in those charts. Another one to look at is something like WIN. Now, WIN is something that a lot of traders have been trying to figure out, hey, I want to buy this thing. It's not up to me to decide what news is legit and not. So if you don't know what happened here is sexual allegations, I'm sure you know, it's everywhere. And the stock takes a serious hit. So a lot of people are saying, hey, where might this stock bounce? And a lot of people are trying to predict bounces here and trying to predict bounces here, but they all got it wrong because the stock dropped from 200 down to 160. The reason they got it wrong is because they're guessing again, right? They're guessing. You're not using that simplified process. So when I'm looking at it, I'm going to try to open this chart up just a bit for everyone so they can see it. Yeah, let's make it a little bit smaller. Okay. If you look here, right back in this area at the very beginning of the year, you've got a couple of small wicks that just laying down here. And again, when you're doing this stuff, it doesn't have to be perfect, but everything's down there about 160 is a pretty good spot. Okay. So you just draw that line straight on out there, you can see. So in the morning, it kind of gets down there just right before this 160 and does the same thing as a Cuervo does. Shoots right up. Now you've got some interest. You've got a big move on this. Again, you saw where it worked on Cuervo, but buying into this big candle first thing in the morning is mostly an emotional trade because you haven't yet established that support and that resistance level. So in this case, In most cases, you'll see this more than what you'll see with a Cuervo. It does not flag. In fact, it comes back down into those lows and retests it again. So it gives back that initial move. Then it starts to kind of gather itself. The emotional players get out. The people get shaken out. And it starts to go sideways for a long time. Now, this is a trade that we did in the trade room, and it's a very good setup. So we're not in here at 160. We didn't get that or get a chance to get into 160. So now we, instead of just buying it because we think it might bounce, we have to wait for confirmation that this thing is actually going to bounce or stands a good chance of bouncing. It's not guaranteed, obviously, but that's what we need to do. So you can see here, I'm going to jump ahead on the chart. It starts to just trade sideways in this 165 area for a couple of hours, okay, before it finally breaks the high day. Now, if you were following me on Twitter or stock tweets, I was saying 167 is a powerful number for this. It gives a 167, you should get a big move. You should start to see a vert move. You should start to see more buyers stepping into this stock. Now, the reason for that is because you had that test earlier. You had lots of consolidation showing short-term support at 164 right here in this little area. So you had support, so you had a place where you could manage risk, and it had all day to go. Now, one other element that was in here is the market was going down consistently. So this thing was bucking the overall trend of the rest of the stocks and the market, trading sideways, and then finally it starts to gear up. So by that point, you've got more than a 70–80% chance that this thing will break out because it's proven itself, that consolidation stretches out over time, and it's ready for a bounce. Now, the reason I bring it up is you can see that once it crosses this 167, look what happens. This thing makes a big, strong move up to the next resistance area. Now, the question that we say this and why this is important, because you have to wait. Remember, simplifying your process, simplifying your decisions, is looking at these levels, because anybody who bought this stock from this point on, right here, I'm going to draw a box right here, okay, to this point. Anybody that bought from this point on over was guessing, because it never broke high. So whether you shorted it or you bought it, it doesn't matter. They were guessing, because the only buy on this was above the 170, above the 171 spot here on the breakout, or 167, excuse me, I'm sorry. This was the breakout. And again, you got chasers coming in here. So buying up here, as I said in the last example, buying up here doesn't mean that you're not going to make money on the trade. But your job is to make as much as you can, is to capture the largest part of the trend. When you chase something that's already $3 above the breakout, you're putting yourself in a bad position. And over time, I can promise you that's not going to work out. You may get away with it a few times. In a really bull market, it may work for a month or two. But overall, that kind of behavior is going to cost you. And really where it comes in to play that's worse is you may, again, interpret that luck for skill. And then it may take you a while to realize that after the market changes or these stocks change, you're like, man, it's not working anymore. Why? Why is it not working? Well, because you're not at the right levels. Stocks trade from one level to the next. That's why I originally started this out by saying support and resistance covers all, and that's what it's there for. So that was the trade. Anybody buying here, shorting, selling, short selling, buying, they were guessing, because you're not short until it breaks down through the low. And when it's stuck in the middle like this, you're not a buyer until it starts to crest through highs. Now, you can pinch in a little bit early, but, you wait for confirmation. You may pay a couple of pennies extra, but you're waiting for the confirmation where the statistics are in your favor. So understanding that support and resistance and just using that will also help you with the decision-making process, okay? Again, things move so quickly in the market. So our goal and our job is try to just condition yourself to look at that chart, to look at those price levels, to look at where the action is, because you should be able to take any name and type it up into that box and immediately look to the right and decide if that is a good opportunity for you or not. Always looking right. Look right, keep looking right, look right on that chart. That should tell you all that you need to know. So hopefully number one can kind of help you start simplifying everything. This game works quickly, and the easier and smoother your decision process is, the more streamlined, the more money you'll make. The next part is being selective. Now this ties into what we talked about, these 1 to 2 types of trading setups that professional traders take. It's being very selective in the types of opportunities or what you think is opportunity, okay? This is a problem for new people for sure, because you think when the market's open that there's opportunity. And sure, something's going up. Somebody made something on something, but is this a tradable stock for you, right? Is this something that works within your plan? Or are you not within your plan? You're just taking something that's rogue. Or what kind of selective, oh, I forgot the E here. Let's be official. You have to be selective in your process, in the types of stocks that you take. Now, this also goes for having the very best stocks that you should be trading, okay? Now, what this means is that stocks historically and always go through a cycle. What's hot today may not be worth a damn 6 months down the road. Now, some stocks are always just great tradable stocks for traders, but then there's you got your basic stocks that come and go. So for example, Tesla's always been a pretty good trader. Netflix right now is a good trader, but maybe a couple of months ago, Netflix wasn't that good. It wasn't too good till post earnings, till you started to get a lot of volatility out of that, okay? So when a trader's looking to make money, there's a difference between an investor's mindset in trading and a stock trader's mindset when it comes to trading. Because an investor doesn't need that money today to pay the electric bill or to pay the mortgage. So if they want to trade, let's say they want to trade Apple, okay? They might be the biggest bull on Apple in the world, okay? And that's great. Maybe in 8 years they'll make a lot of money on that. But if you're trying to pay your mortgage, you want stuff that moves $2 to $3 to $5 now. Big stocks like Nvidia, Netflix, Google, Amazon, you want that alpha to be created. That's how you're going to end up making your money. So not every stock is a good stock to trade on a daily basis. Now, sometimes those hot stocks like Nvidia and Tesla and a couple of those other stocks, sometimes they're just not having a good day either. They're just going sideways. There's just nobody into it. But overall, through the course of the month, it offers several opportunities. One of the mistakes that we make is we just continually try to trade something that doesn't yield enough income to the upside. Or I shouldn't say income. It doesn't yield enough alpha to the upside. You don't get enough range out of that stock or enough movement out of that stock to actually profit anything. You don't have enough leverage in there to do it. So not only are you selective with the type of trade setups that you use, you're very selective about the stocks you trade too. Now, once you start trading something over and over again, the same ticker several days in a row, how this also helps you is not just the range, but you also get kind of an understanding, like you're meeting a person, You get to learn its nuances, and you get to learn how this thing operates. For good example, NVIDIA, it has been going up a lot lately. NVDA, for those that want to look it up. NVDA. It's been going up a lot, but NVIDIA doesn't work quite like a Tesla or quite like Netflix has. And what I mean by that is, yes, it's been going up, but the intraday chart hasn't been always that clean. It always hasn't been that readable in a lot of cases. So you can be misread, you can get stopped out. I think you know where I'm going with that. It's a dirty looking intraday chart. So maybe not every day it's a great stock to trade. There's different circumstances. You learn that when you trade these stocks over again. So I'm going to kind of show you what I'm talking about here. We'll pull up a couple of more charts and kind of go through this real quick. Okay, so let's look at these now. I got NVIDIA, NVDA, NVIDIA up here on the screen. Hope you guys can see that again, and the tech seems to be working pretty good tonight. All right. So when I kind of mentioned about the best stocks, being in the right stocks, is every stock has a unique behavior. And when you saw some of those earlier moves where you got a nice breakout there on Cuervo, it was clean. You got a lot of candles. You had a nice breakout on Win. You had clean movement in most of that chart. Now, some charts will look differently. Like when you're looking at NVIDIA, this is what I was saying about the best stocks. And it doesn't mean it's not a good stock to trade. Also, what this helps you out with, which is something we're not really discussing tonight, is it helps you understand how much position size to use by understanding the behaviors and getting to know the stock, whether it's a cult stock, how it moves, its intricacies. That'll go a long way in the sizing, your ability to stay in the position and not being shaken out, and so on. But anyway, like I said, when you're looking at this from the year, it's certainly bullish. You know, the stock is up $50 damn, right? But, you know, this is $50 on this chart here on the daily, and then you have something like BA when it was going up, Boeing, okay? And you have the same type of move there, but do you see the difference? You know, Netflix kind of looks like this right now, where it just kind of took off here, and you see the linear movement of this versus something like an NVIDIA, okay? Again, doesn't mean that it's not a worthy stock to trade. It's not a great stock to trade. In fact, it's an awesome stock to trade on most days. It just has a different behavior behind it. So when you're looking at these intraday, I'll try to minimize it a little bit more. Look at the type of movement that this thing has. You know, you got some pretty wild swings in this. You know, so if you bought and you held this stock, if you bought it 3 days ago at 239.50, you know, you watched your portfolio increase, and then you watched it give it all back, and then you watched it bounce again. Again, that's NVIDIA, okay? So there is money to be made on these moves. I mean, you got somewhat of a pattern here that you could fall back on. Does anybody see that pattern? Anybody, you guys see what pattern that is? It's like every morning you get a big ramp up. Here's this morning. That's what this black is for anyone that doesn't know. This is pre-market. The black is the trading day. This is post-market, pre-market. I think you figured that out. Anyway, just in case. You see, right pretty much out from the open, 15, 20 minutes in, you get this absurd run on NVIDIA, right? So you got this big move here, then it just kind of tapers off. Then you get the big move again, sells off a little bit in the day. Even when it sells off post-market, pre-market, this last day, it does the same thing. It still tries to rip it back up in the morning, okay? But you've got people buying in these spots here, right? We already talked about this with support and resistance. You got people buying all the way up here. You should be closer to support with your buys here, not here, because resistance is so close by. You're putting yourself in a bad spot, okay? But this is what we mean by the best stocks to trade, because in something like this, it's going to be a little bit more wild. Yes, most likely it's going up, but in turn for that, you have volatility, which a lot of stocks don't produce. Something like a BA here, you know, as this thing was, it's since changed its tempo from January 18th, but during these periods of time, you had some pretty clean, consistent intraday movements where it replicated more of this, where it would just kind of ride moving averages, kind of grind out, be predictable with its movement. Tesla is another one. Is a stock that's very predictable, that when Tesla breaks through a high, that you usually get a substantial move out of the stock, or there is money that's moving in and out of this thing over and over again. And another thing that we didn't talk about there in the whiteboard section was, you know, not just the movement is important with the stock, but that also creates volume. And for those that are trading on both sides, what you can do with a name like Tesla, OLED, a Netflix, a Boeing, you will have opportunities to trade that on both the long side and the short side. So when you have something like that, you don't need a bunch of scanners to go out and find other stocks, right? You don't need to chase the high and low list throughout the day when you've got something that provides you with everything that you're looking for. Plus, it gives you an edge with your knowledge of trading this over and over again. So that's kind of what we mean by the right stock. Now, at some point, these stocks will fall out of favor. You know, they'll go sideways. And I can remember when Apple was once a very huge stock to trade. I think it was 2012 or 2013 or something like that. It was always a big mover, kind of like a Tesla. You always had some alpha. You always had, but you know, lately it hasn't done a whole lot. I mean, well, lately it has done. It's sold off. But if you look up until that period from there to here, you know, while many other of those FANG names had ripped to serious highs that were up 50% or more for the year. Amazon, you've seen that kind of stuff. Basically from October up until, well, you could say the same thing now. I mean, up to October until now, this thing hasn't moved out of this range. It's been at the bottom, either the bottom of this range here or up by the top of this range. It's stuck in this area. Now, you could be clever and you can make money on something like this by buying down here lower at these supports and selling up here towards these resistances. But you probably, these moves take several days. So for example, this being a 169.60 opening price for the year, it rallies all the way up to 80. Yes, that's nice. That's $10, you know, but you have certain days alone where like Nvidia would go up $10 by itself, or you have almost $10 moves. A good example is here earlier with Netflix, just flushing down to 272 and then bouncing back to 280. So you got $8 right there in about a 10 to 12 minute span. So you can see the difference. That's what I mean when you're trading these stocks, okay? And it can work for people that don't like the volatility or the price. You can taper down to something that moves slower, so it's not so freaky for you. If that's what your emotions are telling you, like, oh, this is just too erratic for me, don't trade it. Again, that goes back to just being the very beginning of what we talked about, simplifying the 1 to 2 things. You know, you have certain stocks that are not on your do not trade list. You don't want to trade them. Why? Because you have bad success with them, because you misread them. You get stopped out. You lose every time you trade it. So you just stop trading that stock. You're like, I'm just not going to trade it no matter what it looks like. You have to have those kinds of things in place. But when we talk about the right kind of stocks, you're looking for the ones that will produce you the biggest amount of money, because that's how you're going to actually do this for a living. You need that income. You're not going to get, you know, you're not going to make $5,000 a day trading General Electric unless you're a whale throwing in some enormously large size positions. But these stocks, for most people in their account, will help them out. So hopefully that makes some sense there for you. Now the third one that you're going to have here is good old-fashioned rules, okay? Every trader has to have a set of rules. It's nice to break some rules when you're young and a rebel, or it's nice to break some rules out there. If you want to go 10 miles an hour over the speed limit, that's fine. You want to make it right on red without using the turn signal, that's okay too. But in trading, you need rules. And we've talked about this before in past whiteboards, but those that are just listening, rules are in place to protect you from the worst enemy that stock trading and all trading has. You. You are always your worst enemy. Rules protect you from yourself. Rules are what allow you to be selective, to pick the best stocks, to stay with the 1 to 2 types of trading, to manage the position that you're in. Rules help you do that. And a good one is like, we talked about this just a little bit earlier. Do you need to know this? Do you have to know that to be successful? And Warren Buffett has always been someone who's had those types of rules that are admirable. Now I can remember when I first got back into trading, when I first got into trading in 1999, 2000, most of you know it was the dot-com era, stocks skyrocketed and all these tech companies coming out. And he was always being interviewed on CNBC, of course, as he is today. And he would say, you know what, I just don't understand this stuff. These companies don't make money. What they do really doesn't exist. It doesn't make sense to me, so therefore I don't invest in it. Now, he's just a human being like the rest of us. He makes mistakes. There's stuff that he decided not to invest in that obviously went much higher. Some of these companies that he talked about back then, you know, did stick around and do well. But for the most part, basically, he does not do anything that he does not understand, okay? Because he just wants to stick with what you know. Again, going back to this, the 1 to 2 types, staying with what you know. Dance with the one that brought you. Understanding what's in front of you helps you become a perfectionist on that type of strategy. So kind of back to what we're talking about there, you know, overall he was correct, because, you know, everybody was making fun of him back then, saying maybe he's lost his touch, maybe he doesn't know how this thing works anymore, he's old school. But as we know, he was right. Those companies didn't really exist. They didn't have anything to offer. It was saturated. Only a very small handful of them were able to parlay and stick around to today. So he didn't quite understand that. He stuck to his rules. He didn't follow the herd. He didn't follow the masses. He didn't buy something based on someone else's opinion or based on what the actual Earth's herd was thinking, the herd mentality. You've seen this with Bitcoin, right? He has the same kind of thoughts with Bitcoin. Now, I'm not saying Bitcoin, I agree or disagree with him on Bitcoin, but it's the same thing. He doesn't understand Bitcoin. Now, to kind of prove my point here, I would say that almost 95% of the people that invest in Bitcoin or have bought Bitcoin bought it just based off of the hype alone. They don't really know what they're buying. They just don't want to be left out of the whole of the whole pie, right? They want their piece of the pie. Nobody likes to be left out. That's humiliating. It feels awful. But again, you know, if you don't understand it, you don't invest in it. You don't have to buy it. That's what I'm saying. You don't have to trade foreign currencies. You don't have to trade options. You don't have to trade stocks. You don't have to trade Bitcoins. You don't have to know all of these things to make money. You pick the area. If you're a Bitcoin superstar and you know this, you're doing well with it, you don't need to learn stocks. You know, people call me up all the time, ask me, what do you think of Bitcoin? It's like, I don't know much about Bitcoin. That's not what I do. I do my 1 to 2 types of trades. I keep my job simple, right? Selective, and I obey my rules. Well, at least most time. I'm human. I go rogue. I'll admit it. I'm not perfect, okay? But kind of think of that there as well. You have to have these rules. So kind of in closing here tonight, when you're really trying to make that transition, or you look back and you say, why am I not a successful trader? Where am I messing up? And most of it comes right from here. You've screwed something up out of this area. And most likely, you've either executed your trade wrong or you've managed your trade wrong. And to touch on that, management means that you can see this trade ain't working out, but you just have that ego in place that won't let you let it go. You can't just sell it, because I'm not selling here. I'm not getting rid of it here, because you keep thinking that you're right. Your biases are getting in the way of you making money. But when you're really trying to make that transition, you're really trying to be successful, you need to keep track of these basics. You don't need to know all this stuff to make money. As you progress and you start to develop consistency, then that's fine. You can go ahead and add VWAPs, add moving averages. You know, start to put a couple of different things in there and experiment with it and see if that gives you a slight little edge over your competition. Gives you a little slight edge on your entries. You know, helps you with your management, helps you control your stops. Go ahead, but be successful first. So I'm going to end it right there before we go into the Q&A. What I do want to do is, I've often said this 100 times, I'm not going to make a sleazy sales pitch out of it. This is the last week of free trials for the trade room. So anybody that's in here, you want to come trade with us, no credit card required. I'm going to put a link in here. It's going to pop up on the screen or show up in the box there somewhere. Just click on that link and then just fill out the information there, and you can start trading with us for a week, no obligation. And then what I'll do here is, that's it. I'm done. I'm going to sit down here at the computer and go ahead and take your questions. If you bail right now, you guys checking out, you don't stick around for Q&A, thanks for coming to the webinar. Until the next one, take care. So let's get into the Q&A.